Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Harmony Gold well down the track with its cost-effective renewable energy build. Platinum deficit worsens beyond forecast. And Harmony investing 2 billion rand in underground gold mines, earmarking 1 billion rand for surface gold. South Africa's biggest gold mining company is well down the track with its new solar build and with group operating free cash flows increasing by 46% to a new half-year record of 10.4 billion rand in the 6 months to December 31st.
We are well down the track with our solar PV build. We've got our strategy and our net zero well mapped out. I'm actually glad to report that we have turned the first sod on our 100 megawatt plant that we have announced the green loan for a couple of years ago. So our program is rolling out. I mean, we're going at this as fast as we can. For us, our mines are deep, our mines are energy intensive. So for us, it's not necessarily getting the mines in the near term totally off the Eskom grid, but it's reducing our exposure to the price of electricity, because obviously green electrons are not only green, they're also cost effective, and that makes a huge difference to our power cost margin. So we're growing our renewable energy as fast as we can.
The platinum market recorded a deficit of 995,000 ounces for full year 2024, which is 46% higher than previously forecast, as total demand exceeded 8 million ounces for the first time since 2019, compared with supply at 7,293,000 ounces.
Well, it's really because the imbalances in the market have been satisfied by flows from above ground stocks. So, effectively, there's been enough vaulted material sitting around that can be liberated and made available to offset the market imbalances. That's something that we think is unsustainable. We talked earlier about the impact of tariffs and the flow of material into NYMEX approved warehouses. That's something where we're seeing that metal flow from effectively what is non-visible above ground stocks into visible above ground stocks. So it is available in the future to balance the market, but it's gone to the US because they're concerned about a market shortage there as a result of tariffs. And so, effectively, those above ground stocks are being depleted or moved around, and at some point we will approach at the level where those above ground stocks are unsustainably low, and as a result, the market price will respond to reflect that. And I would observe that platinum's been in a fairly well established sideways trading range for getting on for over 4 years now. So between roughly 900 and 1100. And if you put that on a chart and just draw a couple of lines, and I'm not a chartist per se, you will notice that trading range is narrowing. And typically what you'd see with something like this is as it narrows down to a point, then you have a reaction either to the upside or to the downside. Given the underlying fundamentals of platinum and the deficits, we would argue that it's probably going to be a positive response, but obviously markets can prove you wrong. So, but certainly we're heading towards a point where something needs to happen in terms of a change in direction.
During this financial year, South Africa's largest gold mining company will be investing more than 3 billion rand in its South African assets.
The acquisitions of Mponeng, Moab Khotsong and Mine Solutions were transformational for Harmony. This is evident in our overall improved results. We are therefore investing in these transformative assets to ensure they continue creating value for years to come. Phase 1 of Kareerand Tailings Storage Facility expansion at Mine Solutions was delivered on time and on budget. Phase 2 is currently underway, and we expect to have it completed before the end of calendar year 2025. Mine Solutions steady state production is over 100,000 ounces over its life per annum. The projects at Moab Khotsong and Mponeng are progressing well and will extend the lives of these mines to at least 20 years. These projects have added a combined 5.2 million ounces of gold reserves and will ensure steady state production at Moab Khotsong of over 200,000 ounces and at Mponeng of over 250,000 ounces per year. Both mines will deliver an average recovered grade of about 9 grams per tonne. These projects demonstrate our commitment to gold mining in South Africa, ensuring that they continue delivering excellent margins at a low all-in sustaining cost for years to come.
For mining news as it breaks, stay logged on to miningweekly.com and register for our free daily newsletter.